Joining us right now with a look at how VCs are considering privacy concerns in Silicon Valley is Ann Winblad. She is Hummer Winblad's Venture Partners founding partner. And Ann, it's great to see you as always. Thank you for joining us today.
Thank you.
What do you think about everything that's happening? You're somebody who knows the Valley inside out. You know how these concerns are affecting so many different companies and how people are thinking of it. Let us know what you see.
Well, certainly Facebook is one company here of many that leverages data for their business model. And for the most part, as we've learned over the last few years, customers haven't been thinking about what's really happening with their data or even looking closely at their privacy settings. Some of the new European standards are really going to have a great impact this coming May, which is like tomorrow, effectively. And those will affect all of the companies around the world. I don't think that companies are going to be able to sustain all of their business models based on charging customers not to use data. And data is an important element here. So we're going to have a major compromise on the part of these corporations on how much data they use, how much transparency there is in how that data is used, and how easy it is for the consumer to see what data is actually being used.
Let's talk about what you just said. The key point for me, I think, is that you don't think these companies will be able to sustain their business models if there's an opt-out button. What do you mean? That they won't be able to continue to grow and see revenue come in as quickly if they don't have access to all of their customers' data?
I think new businesses will spring up that will have free use, but more transparency on the use of the data, more control of the data, more transparency in what their business model is. As Cheryl explained, who accesses that data, how is the data combined with other vendors. I pay a premium subscription on LinkedIn, for example, but not to not see advertising, but to get other services. So I think if you're going to be paying a premium on these business models, there'll be an expectation of not just seeing ads, but that you'll get other services in return.
And though, we've been talking this morning about is there a possibility of a paid product where you could opt out of any kind of data collection? How big a product do you think that is? LinkedIn, to me, is not necessarily the corollary in that is a business product for the most part, and this is considered more of a consumer product?
Yeah, probably a good example is Pandora, the music streaming service. And, they started the service with everybody seeing ads. Again, I'm a premium user on Pandora. I pay not to hear or see ads. It'll be interesting. I'm starting to hear a few ads on my Alexa from Amazon, whether I'll be charged more not to hear those. So certainly it works. The question is, do you end up with 2 billion consumers with that business model?
And as an investor, how are you kind of looking at these things? First of all, what did you think about Facebook shares before any of this happened, and what do you think post the situation?
Well, Facebook is a really technically astute company, so they can adjust their offerings any way they want. They have the technical chops to build any kind of product. It's a very, very skilled company. I think the scale that they achieved was beyond anything that any of the leadership of any company would have experienced. So they have a major recovery that they've got to undertake here. I do think all social media, we're in a digital world now where the bad actors are going to use a digital world as well as the good actors. Mm-hmm. So the paying attention to the bad actors has become really important to the companies of scale.
And it's Bob Johnson. Here's a question. If I were a congressman sitting in Washington and I was concerned about impact of loss of privacy on my constituents and consumers, would you suggest there should be some sort of penalty, monetary, loss of rights to operate, if companies fail to protect some definition of privacy? Because the argument goes that if whatever a company creates to protect privacy, somebody's going to try to create a code to break it. And therefore, how do you ever come up with a balance where you can deter a company from having lax privacy rules and at the same time have realistic regulations that go to the issue of what's the damage done and how you calibrate the amount of damage a company should suffer if somebody breaks into their system and takes advantage of privacy.
Well, there are a couple issues you pointed out. Number one is this is a contiguous problem. It's not a one-off. So once fixed, you'll keep fixing it. This is true for data breaches as well. In many regards, this is the same as a data breach that might happen for a retailer where my credit card information is stolen. And there are penalties and increasing penalties there. That's been a conundrum as well. The question is, do regulations and penalties cause companies to invest more in security measures, in operational measures, or do all companies have an obligation no matter what? So it appears, do you need a carrot or a stick? Are you going to lose your customers? Are you going to get beat up by the government? But this is a real problem in a digital world. I mean, we really went in the last 10 years from a combination of some digital and we'll call it bricks and mortar or analog to a pure digital world. Large enterprises are still undergoing major digital transformations. That means that they're going to offer better services and more interesting things to their consumers, but it also means that they're extremely vulnerable to professional bad actors.
And it's always great to see you. Thank you for your time today.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.